Let's get straight into Diamond Bank because certainly the market not impressed with the set of numbers that were released there.
Morning, Alishia. Clearly the market wasn't impressed, like you said. Results before now, even though have not been particularly spectacular, we've had basically a level of reduced profits in Q4, with the exception of the likes of GTB, which actually had better performance. But Diamond Bank is the first bank to actually release an outright loss in a quarter. Meanwhile, while top line actually came in strong, in line with our estimates, we think the main problem actually just came out of provisions. We jumped 11 billion just in Q4, while we're already even worried about a 7 billion charge in the third quarter. So it actually dampened market sentiments because if you exclude that from the results, you had relatively improved performance across the entire spectrum of the company's operations. And so the provisions actually have been a bit disappointing. We will need management to provide a lot of clarity as to what exactly the source of that provision is and how exactly they intend to plug that source of leakage going forward.
Just taking a look at it, I mean, expectations, broadly speaking, from the markets had been that we would see a significant reduction in Diamond Bank's loan loss provisions heading into this year, driven by an improvement in asset quality. Is that still the expectation, given the Q4 numbers that were released, the expectation for the year ahead? What are you making of the stride it's making in actually improving asset quality?
Those efforts in terms of asset quality don't appear to be having the desired effect right now, to be honest. Because in as much as they might, keep reiterating that they're making efforts along those lines, we need to see that, reflect in the numbers. And one of the things they've been doing is try to sort of broaden their operational base, diversify into the retail segment, while sort of maintaining the corporate bias that they started out with. And we would have expected that, given the fact that operational efficiency didn't actually go to the bunkers, it didn't go particularly bad. We're really surprised, at the level of provisioning that we're seeing right now. So in our view, the efforts towards asset quality are not having the desired fruits. Interestingly, the bank reportedly did not sell any NPLs to AMCON in the first round of purchase. So we'll be looking to see what could happen in the second round of purchase, because it's one of the ones that, with an NPL of 15%, that's still above the CBN's regulatory minimum of 10% of NPLs. And that gives us concerns that the provisioning may not come to an end if they don't get rid of those NPLs very soon. Well, so as far as asset quality is concerned, we're still a bit concerned.
Of course, asset quality, one focal point. The other that you just briefly touched on, operational efficiencies, costs as well. Detail is what the markets are waiting on that front. But we know that for operational efficiency, Diamond Bank has decided to focus on its core banking business and is likely to sell off some of its non-banking subsidiaries and integrate its mortgage bank into the group as well. What are you making of the steps it's making in that regard?
In that regard, I think we're actually quite pleased. Of course, contingent upon the bank's ability to execute that strategy flawlessly. They've always been a bit clear about that. They don't want a very cumbersome banking operation. They want to streamline their activities. And I think we're a bit pleased with that focus. But like I said, execution will be key. In the results, you will see that cost-to-income ratio actually continues to decrease from 70% at the start to just about 63%, which is a very good sign, which shows that Project Sparkle and a lot of other efficiency initiatives appear to be having the desired effect. So I think as far as that angle is concerned, in terms of operational efficiency, we're viewing that positively. We'll be waiting to see the bank execute that strategy based on the compliance plan that is sent to the central bank.